This is the only breakup structure video that you guys will ever need. I'm going to explain what a breakup structure is, how to spot it, and then how you guys can start taking trades with it so you guys can finally turn profitable. My name is TJR. I've made over 7 figures day trading at the age of 23, and literally every single trade that I take has a breakup structure involved with it. So that being said, let's jump onto the charts and let's get into it. So the very first thing that we need to understand is what is a breakup structure, or for short, BOS, okay, breakup structure. So what is a breakup structure? The definition is literally in the name. It's a trend change, okay? It is the current market structure breaking, okay? It's showing a change in order flow. It's showing a change in trend. It's showing a change in structure. All of those are literally the same exact thing. So what is it? It is a trend change. It's a confluence that shows us when the trend is changing and when the trend or the current trend that we're in is changing and breaking structure into a new trend. So in order to understand what a breakup structure is, we need to understand what a trend is, okay? So we're going from definition into another definition. As you guys know, this is super simple day trading knowledge. There's 3 different ways that the market can move. In an uptrend, how do we identify an uptrend? With higher highs and higher lows, okay? And then the second way that the market can move is in a downtrend with lower highs and lower lows. The third way that the market can move is through consolidation, where we are pretty much just moving sideways. There's no identifiable trend. And that is where we will be able to identify breakouts in, which is a form of a breakup structure, but it's a little bit different than how we identify a breakup structure within these current trends. But I'm going to show you guys how to identify a breakup structure within an uptrend, within a downtrend, and then also how to spot a breakout from consolidation or that sideways movement. So it is a trend change. So now that we know what a trend is, we know that an uptrend moves in higher highs and higher lows, and a downtrend moves in lower highs and lower lows. We also need to understand what a high and what a low is. We're going even deeper. So we go from definition to definition to definition. And then once we understand what a high and a low is within the market, and I know you guys might think you guys know what it is, but a lot of people, believe it or not, this is one of the most difficult confluences for them to understand. It's crazy. It's one of the easiest confluences in my mind to understand and get, but a lot of people mix it up and I have no freaking clue why, but I'm going to make this as simple as possible for you guys. This is why we're going through all these definitions first. So what is a high within the market? It is a move up and then a move down. So that means it's a green candle followed by a red candle. What is a low within the market? It is a move down, then a move up, a red candle, then a green candle. And we take the lowest point of those 2 candlesticks, whichever wick or body that the lowest point gets to, and then whichever the highest point that either the body or those 2 candlesticks formed gets to, that's a high and that's a low. Question here, is a high a green candle then a green candle? No, because there hasn't been a move down yet. A red candle is a low. A move down and then another move down? No, because there needs to be an up candle to form the low. Believe it or not, some people do not understand this. I know this may seem beginner to some of you guys, but it really is ridiculous how some people do not understand this. So now that we understand all the definitions to be able to create what a breakup structure is, the definition, we know what a trend is. We know that trends are created by higher highs and higher lows and lower highs and lower lows. And we know that the trend has to change, and that is what defines a breakup structure. So now we're going to find the definition of a trend change. How does a trend change? Well, if we are in an uptrend making higher highs and higher lows, how would this trend change? Well, it's no longer an uptrend if we end up making a lower low and then a lower high, right? Because that qualifies as a downtrend, okay? So in turn, what is a breakup structure? It's when the current trend that we are in breaks, okay, changes. And within an uptrend, how can we identify when the uptrend is broken or changes? When a low gets closed underneath. So again, how do we identify uptrends? Higher highs and higher lows. Boom, we're in an uptrend. When does this trend change? Once we close underneath the most recent low within the uptrend. Now, within a downtrend, we're making lower highs and lower lows. When does this trend change? Or when does this trend break structure? When we close above the most recent high within the trend. Why? Because that is not following the trend rules. What is a trend? A downtrend, lower highs and lower lows. What is an uptrend? Higher highs and higher lows. When this low gets closed underneath, we are no longer in an uptrend. When this high gets closed above, we are no longer in a downtrend, okay? And that is what a breakup structure is. Now, believe it or not, I'm sure a lot of you guys are like, I got this. I'm sure you guys don't, because a lot of my students, they still, for whatever reason, are unable to identify these things. And I think it's due to their incapability of being able to identify trends on a chart, because the chart isn't going to look as clean as just like higher highs and higher lows moving up, lower highs and lower lows moving down. We need to be super good at being able to identify these trends in real time. So right now we're in a whole bunch of consolidation on the S&P 500. I'm going to make this a little bit easier. Let's just go into like a higher time frame. How about this? I also want to find some examples that we can use. Yeah, so this is gorgeous. So let's go in, trying to find a clean example to start you guys off with. Okay, this is good right here. So let's just look at this area of price right now, and we'll start from right here. So let's say that we are right here. What is the current trend that we're in? So we're looking from the left side over to this line. What is the current trend that we're in? Well, it's pretty easy to say we're in a downtrend. Why? Because price is moving down. But let's look at the candlestick anatomy to actually prove that we are in a current downtrend. So let's just start right here. We have a low and then we have a high, and then we have a low right here. Now, again, let's get into the anatomy even more so here and look at this. What consists of a low? A move down, then a move up. Black candle, then a blue candle. We take the lowest point of those two candles. Boom, it's this wick. Then we have a high, a move up, then a move down. Boom. Then we have another low, move down, then a move up. Now this is the most recent low. What's this low? It's lower than this one. Then we have a high, a move up, then a move down. Before I do that, trick question, or not trick question for you guys. Is this the high? Is this a high on the current time frame that we're on? No, it's not. It is not a high. Maybe on the lower time frames, it is a high. Actually, I'm sure of it on lower time frames that it's a high. But on the current time frame that we're in, on the 4-hour time frame, this is not a high. Why? Because this is a move down, then a move down. That does not make a high. We need a move up, then a move down. So where is our move up? Right here, move down. Boom. This is our high. We take the highest point of these two candlesticks together. We don't give a fuck about this candlestick. Why? Because there's no move up prior to it. So we have a low, then a high, then a lower low, then a lower high. Okay, we're in a downtrend. Now let's just see this trend continue. We make a lower low, move down, then a move up, then a move down, lower high. Move down, then a move up, then a move down, lower low, lower high. Move down, then a move up, then a move down, lower low, lower high. Okay, we are in a downtrend coming up to this point right here. Now, something that can happen within trends is that we will make a higher low and a lower high. You're like, wait a second, what fucking trend has a lower high, but also a higher low? Lower high, but also a higher low. Still a downtrend. Why? Because the most recent high has not been closed above yet. That's how we identify a breakup structure, and that's what we're going to be leading into right now. So even though we make a higher low right here, that doesn't change the current downtrend structure that we're in, okay? That does not change the current downtrend structure that we are in, okay? It doesn't change anything. Because when we're in a downtrend, what are we doing? We are only monitoring the highs, and more specifically, the most recent high within the downtrend. So if we make a higher low, we don't really care about it too much. Why? Because if the downtrend is to break structure to the upside, we only need to be monitoring the highs, because we very well, just like we see right here, can make a higher low, and then the downtrend can continue to end up making a lower low from that low. And that's what I was saying, where some people, they get super confused and they get really caught up and they are unable to identify these things. Within a downtrend, we are looking at the most recent high that has been created, and we are looking for a candlestick to close above it. That is the only way that we are going to be able to break structure. Okay, and within an uptrend, we are looking at the most recent low that has been created, and we are looking for a candlestick closure underneath it. That is the only way that we can change the trend. So within this trend, we have, this is the most recent high. Okay, whatever, we come down and we take out a low. We don't care about the lows when we're in a downtrend. We care about the highs. So this is our most recent high. It's a move up and a move down. The highest point of those two candles. And then what do we get? This candlestick closes above this high right here, in turn, changing the trend to the upside. And then boom, price moves up. Awesome. Now let's continue this analysis moving forward in price. So now that we're in an uptrend, what are we doing? We are monitoring the lows. Okay, so we break structure on this candlestick right here. Now we're in an uptrend. So what do we want to do? We want to be monitoring the lows. Move down, then a move up. Lowest point of those two candles. Boom, this is our low. We come up, we obviously make a much higher high than this right here. Move up, then a move down. This is our high. Then we want to make another low. We make a higher low, move down, then a move up. Awesome. This is our low. Then what happens? We get a break of structure. Within an uptrend, we are monitoring the most recent lows that have been created, and we are looking for a candlestick closure underneath them. Boom, this candle closes underneath it. Awesome. We have now changed the trend, and we are now in a downtrend. So now within this downtrend, if we are looking for a break of structure back to the upside, what do we need to be monitoring? The highs. Cool. We move up, then we make a move down. Now this is the high that we're monitoring. We move up, then we make a move down. Now this is the high that we're monitoring. When do we break structure back to the upside? Was it on this candlestick right here? This one? Is this a break of structure? Well, price pushed above here for a quick second, right? No, it's not a break of structure. This is a candlestick wick. We need a full candlestick body close above a high or underneath a low, depending on what trend we're in order for price to break structure. So on this candlestick right here, do we break structure? No. On this candlestick right here, do we break structure? Yes. We break structure, and then boom, we're back into an uptrend. Now, obviously, this confluence, I'm not saying that it is useless. It's one of the most beneficial confluences that we can use. However, if you just try and use it on its own by pressing buy when we break structure to the upside or pressing sell when we break structure to the downside, you are going to lose all of your money. This needs to be in combination with a bunch of other confluences in order to take a highly probable trade to predict where price action wants to go. And I have a super in-depth guide that is like 5.5 hours long that goes through every single one of these confluences and then how to put it together in a strategy. And I'll leave that link in the description below for you guys to go over all those confluences to be able to put them all together to be able to actually take a trade using break of structure. But break of structure on its own is not enough to take a trade. However, it is one of the most important confluences when we are looking to take a trade. Does that make sense? We can't be using break of structure on its own to take trades, because if it was that easy, then this simple confluence would make every single person the richest person in the world. And it is not that simple. Day trading is very difficult, but I have supplied you guys with a whole bunch of confluences such as this one to be able to take highly probable trades within the market in that 5.5 hour long video. So you guys should go check that one out if you guys haven't already. Now, we know how to identify uptrends and downtrends. Let's run through a couple more examples here. Okay, let's look at this, for example, right here. Look at these massive wicks here. Okay, this is part of the stuff that I'm talking about where people can get confused. And I know that this can be confusing when you see a candlestick with wicks all the way up here and then wicks all the way down here. This was a high impact news candle, but it's a great example for something that we're looking for, okay, when it comes to identifying trends. So let's go ahead and start right here on this candlestick. So what's the current trend that we're in? Well, let's say we're on this candlestick. All I do is I look to the left and I look at what previous candle's price action was. Well, I see a high right here, and this high was closed above by this candle. And then I see a low right here. And if we're just waiting on this candle and say that we don't see anything prior to this, this is an uptrend. Why? Because I'm just looking at the most recent highs and the most recent lows within the market. And the most recent high was closed above and the most recent low hasn't been closed underneath. That's the easiest way to be able to identify a trend. You look at the most recent high and you look at the most recent low and you see if the most recent high has been closed above, and you look at the most recent low and you see if the most recent low has been closed underneath. In this case, we are in an uptrend. Higher high, higher low. Cool. We are in an uptrend. Awesome. This is our low that we're going to be monitoring. I'll go ahead and get rid of this. Boom. We close underneath this low. Now we are in a downtrend. But then, just like that, we want to be monitoring the highs. Why? Because we could very well break out of this downtrend back to the upside. From there, as you can see, this is why we don't want to be entering and pressing sell right when we get a break of structure to the downside, because there's other confluences that are necessary in order to understand where price wants to go. But We're in a downtrend on this candle. Now we're monitoring the highs to look for a break of structure back to the upside. Awesome. We get a candle closure to the upside right here. Now we're in an uptrend. Okay. Now we're monitoring the lows to see a potential break of structure to the downside. Okay. So this is the most recent low, move down, then a move up. We identified the current trend. We're in an uptrend. Why? Because this high was closed above. We don't care about the highs because we're in an uptrend right now. And in order for the uptrend to break, we need a low to get closed underneath. So move down, then a move up. Boom, lowest point of those two candles. This is the low that we're targeting. Okay. We get a move down, then a move up. Awesome. Now this is the most recent low. We're still going up. Move down, then move up. Awesome. Now this is the most recent low. Move down, then a move up. Do we get a candlestick closure underneath this line here? Underneath the most recent low. We have 1 wick, 2 wick, 3 wicks underneath this candlestick low right here. But do we get a candlestick closure? No. So this uptrend remains intact. This is not a break of structure. And what are we doing? We're still monitoring the lows. We're looking for new lows to get formed to potentially get broken. So move down, then a move up. That's a low. We take the lowest point of those two candles. This is the new low that we're monitoring. Move down, then a move up. If we zoom in, we can see that this is a blue candle. Now this, okay, again, same thing here. This is the low that we're monitoring. We see a candlestick wick underneath here. Is this a break of structure? No. We see candlestick wick underneath here. Is that a break of structure? No. And then what do? We end up forming a new low. Move down, then a move up. Now this is the most recent low within this uptrend. This uptrend is still maintained, and this is where a lot of people can get confused is they keep flipping their buys. They're like, oh, we broke structure to the downside, and then, oh, we broke structure to the upside. These are candlestick wicks, not candlestick closures. So we are still in the uptrend that was formed on this break of structure right here. And as we can see, price is continuing that trend higher and higher. From there, we have a move down, then a move up. Awesome. Now this is the low that we're monitoring. Do we break this? Move down, then a move up. Awesome. Now this is the low that we're monitoring. Move down, then a move up. Now this is the low that we're monitoring. And then boom, we finally get a break of structure to the downside right here. Again, this is break of structure on its own is not going to help us indicate where and when to press sell or where and when to press buy. But we need to understand how this confluence is used, coinciding with all the other confluences that I've given you guys across my YouTube channel. So this is a super, super, super powerful confluence that in combination with a liquidity sweep, in combination with a fair value gap, in combination with breaker blocks, equilibrium, it can help you guys understand where price action wants to go with a high probability on a daily basis. And that pretty much wraps up how you guys can spot a break of structure, what a break of structure is, and how you guys can go into the real markets and identify it on the chart. And again, if you guys want to be able to put all of these things together, go check out that 5.5 hour long video. I love and appreciate you guys. Subscribe if you haven't already. Peace out.